He may have lost. Larry Kutlow, CNBC senior contributor, and of course host of the Larry Kutlow Show on WMAL right here Saturdays at 7 p.m. is now our guest. And, well, China's messing with us again here, Larry. Another bet. Can we talk a little bit about the Chinese economy here? Because I've heard people from President Obama to Chris Matthews over the past several years waxing poetic about how incredible the Chinese economy is and how great it is that they spend their money on their infrastructure and they've got bullet trains and they've got the greatest airports in the world and they're shaming the Western world. And yet their whole economy was really sort of a Potemkin village, wasn't it? We're seeing it disintegrate.
Geez, you got to go with Obama on this. He is such an astute financial analyst. His acumen is beyond belief. And I wouldn't want to buck his forecast.
Well, you know, he dips into his vast knowledge and experience of working in the business world and the financial world.
Yeah, there's a rumor that he's recommending the purchase of Iranian stocks for ordinary investors.
Oh, my God.
Seriously, though, I mean, this really is sort of a huge turnaround compared to what we were hearing about the Chinese economy a couple of years ago. Or is this, as they say, a correction, and it's not that big a deal what's going on in China?
Well, you know, China is slowing down. It has been for several years. It has had, I think, really more of a psychological impact on other world markets, including ours. And I would offer some advice to investors not to get too tangled up in the China story. You don't really know. In fact, I'm not really sure the Chinese stock market is particularly linked to the Chinese economy, because you had a gigantic stock market bubble there a couple years ago, and so that's being unwound. But I see that more as a China story, to tell you the truth. Their economy is sputtering. I agree with that, and is probably looking for a bottom. But I don't think it's a calamity. I mean, some of the best analysts I know are thinking China will kind of work its way down to 4 or 5% growth and probably stay there for a good long time.
Yeah.
And it's also hard to know if their actual published numbers are correct.
Right.
Look, China, in terms of American linkages, American exports to China are 2/3 of 1% of our GDP. So it's really small potatoes. Now, I acknowledge psychology and I acknowledge some, investment linkages, but I would, the best I can say right now is, to me, the two biggest issues for the U.S. market is A, profits, the mother's milk of stocks, which have been falling the last 2 quarters and are likely to fall this quarter, and that's the biggest problem. That there is the single biggest problem. B, why in God's name would the Federal Reserve want to raise interest rates sequentially, quarter after quarter for the next couple of years, when commodities are deflating, oil is deflating, profits are falling, the economy is growing less than 2%, and there is no inflation. See, it just doesn't make any sense. And I think in many ways, this correction we're seeing now is partly a function of all this Fed, aggressiveness and statements of a week or 2 ago or 3 ago. I mean, it doesn't make any sense to me whatsoever. And what this country needs, by the way, is not higher interest rates. What this country needs is a 15% corporate tax rate, which would be the single best economic growth and job stimulant possible. Do that, and a lot of things will improve.
I look at the market, people who are out there commenting on the market, and they say that there's a linkage between the price of oil and the stock market activity in this country. I mean, when the price of oil goes down, the stock market goes down. When the price of oil goes up, the stock market goes up. Is there really truly a linkage there?
Well, I'm a complete contrarian on this.
Well, I'd like to hear your point.
I believe that lower energy prices is a terrific plus for the American economy. It's a plus for consumers. It's a plus for businesses like industry and manufacturing and retailing. It's not a plus for the oil explorers and drillers. I get that. But, that sector is way less than 10% of the overall index. we're probably bottoming in oil. I mean, a friend of mine told me in Canadian tar sands heavy crude is selling for $13 a barrel right now. And that tells me you're coming to a bottom. But, because oil is more important than it was 20 years ago to our economy, you do get reports of the damage from the oil sector. So the way I look at that is the bad news there comes before the good news, where the rest of the 90% plus of our economy benefits. And therefore, I think that before too long, it's going to turn out to be a gigantic plus, and the stock market kind of gets into these patterns. They don't hold up over time. It's a very short-term algorithm. So we have a lot of problems with our economy. All right, our taxes are too high. Our corporate taxes, particularly, are way too high. Our regulations, in my opinion, are way too burdensome. But on the other hand, lower energy prices is a good thing, not a bad thing.
All right, Larry Kutlow, we got to leave it there, but we're looking forward to talking to you next Tuesday because it will be the day of the Iowa caucuses, and we will get you to make a prediction.
Day after.
Oh, that's right. It's on Monday. Then we need your one-word prediction. Just give us a name.
I will be in Des Moines covering it. Allegedly for CNBC, but I'm really going to cover it for you guys.
All right. Well, I'll be there too, so we'll have a steak or something. Okay.
Oh, that is great. Yeah. Yes, absolutely.
And you're
on me.
And you're buying. Me. Oh, absolutely, you're buying.
On me. It looks like I don't know. Tough to say. Trump and Cruz looks like a toss-up. Bernie Sanders looks like he's going to win. If Bernie Sanders wins in Iowa and New Hampshire, Hillary's finished. That is Bernie Sanders plus the FBI. On the other side, if Donald Trump wins Iowa, that race is over. Make no mistake. It's over.
There's the bold predictions. Larry Kudlow, thanks for joining us.